My name is Yagub Rahimov. For those of you who doesn't know me, I'm a professional trader and the author of upcoming Trader's Journey book called Forex Not for Dummies. And our other speaker, Adamos, here will also introduce himself now. Adamos?
Hello, Yagub. Thank you very much. Good morning, everybody. For those that you don't know me, my name is Adamos Anastasiou. I am head of brokerage at FCM Forex. I'm a certified technical analyst and I have extensive exposure and trading experience in the Forex market. Yagub, shall I go on?
Yes, please.
Okay. Today I'm going to start with GBPUSD. Okay, you can see my screen. First of all, I want to talk about the daily GBPUSD structure. We see that it's downtrend, and we see that the GBPUSD has reached here 140.76, which is a 6.5-year low. And we can also see that it bounced up to 146.66 and has reversed. Here it has created a swing trading pattern, and the bearish has refreshed. This happened actually yesterday. We see a long bearish candle on the daily time frame, which was triggered after the CPI release in the UK yesterday. And if we look at the hourly time frame, we see more clearly the triangle trading pattern. And that, as I said before, was triggered with the CPI release of the UK economy yesterday. The year-over-year CPI was 0.3%, which is far behind the 2% target of Bank of England. And in addition of that, we saw the core CPI release being lower than expected at 1.2%, while it was expected at 1.3%. And that has increased the bearish sentiment in the GBPUSD currency pair. It fell down to 142.76 yesterday. So if we are following this breakout here, we could make more than 100 pips. And at the same time, when I was looking at the chart this morning, this level was still not penetrated, the 142.76. It created a flag trading pattern in the price charts between 143.10 and 142.76. I consider this as a continued pattern. So I expect the GBPUSD to go lower. I expect the prices to go down to 142.09. This is the next target. And then we have the daily bottom as well. At just a moment, sorry for that. Then we have the daily bottom. Yeah, this is a daily at 140.76. So we favor the downside in the GBPUSD. And looking forward for today, we have the claim count change release, which has to do with employment in UK. It measures the number of people who have claimed for unemployment benefits. However, this is not expected to be a very good number. It is expected to be above the previous release. So the previous release was minus 4.3K, and now is expected to be minus 2.9K. So less people are going to claim for unemployment benefits. And if we see less people on this, it means that the economy is increasing, the economy is strengthening. However, the CPI was not so good yesterday, and if we see a number that is disappointing, it means that the Bank of England could delay for raising the rates, and that will add pressure on the sterling. And this is going to confirm our view on the technical analysis view of the GBPUSD. The next one that I want to discuss about is gold. The gold has rose up to 1262.93 peak, and then retraced down to 1190.52. This is a 38.2 Fibonacci level, and also it's a previous peak. So I consider this as a strong one, and in daily, and the XAU-USD could start and again the bull run and go up to 1262.93, or if we look at the hourly, if we see a break of 1216.60, the upside chances will increase and could go as a first target. We can place the 161.8%, which is a short-term target on the intraday, and we could see gains up to 1227.02. What is impacting the XAU-USD today, the gold versus the US dollar, is the FOMC minutes release. Of course, we have some more US release as well, like building permits, housing start, industrial action. That will impact the gold as well, but I believe that traders will stay focused and wait, stay in sidelines and wait for the FOMC release, which is going to show and give some indication where the FOMC, where the Federal Reserve is heading concerning the increasing the rates, and how would be the pace of increasing the rates. In yesterday and in the past 2 days, we have some comments from members of the FOMC and have been saying that inflation is too low, and they are going to monitor inflation more closely before considering raising the rates. Janet Yellen has been talking about slowing the pace of raising the rates, and also she didn't move out of the table the chance of negative rates. So it has been more dovish than what has been 2 weeks ago. So with that said,
based on this inflation, Adamos, inflation fears, because gold generally appreciates when the inflation increases. When the inflation goes down, gold depreciates. So based on the rumors that there is that the Fed wouldn't increase the rates, but they would actually cut the rates, would you expect gold to go down?
I think that what the traders look and the market perceives. Sorry?
With the news announcements from the FOMC meeting minutes, not a swing.
Yes, it's a bit of strange situation, because with all this easing happening, not only with Federal Reserve but with Bank of Japan and ECB as well, inflation should go up. However, we see that inflation is squeezed at zero level, and even some countries they have deflation. But traders are looking majorly on the central bank's policies, I think, and then on inflation. So when they're taking further stimulus, the gold goes up. This is how I look at it. So if we see more dovish comments on the minutes today, I think the gold will jump up.
Okay.
And as a first target, I see the 1227. Nevertheless, inflation, gold is inflation hedge instrument, of course, and it's impacted by inflation.
And I'm also, it's just a out loud discussion with you. I'm also kind of standing idle on gold right now. That why people would hold any cash reserve or cash saving, because the Fed and all the other central banks have started to apply negative interest rates. So why not because you can put a negative interest rate in cash. However, it's very hard to put a negative interest rate on gold. So that's actually, as you said, an interesting phenomena. That why people are holding still cash and not gold, and on the other side, why the reason why people don't hold gold is because they are not afraid of inflation yet. So it's quite a dilemma right now.
Yes, we are going to see. I mean, even for gold, even if, okay, even it is going to continue into range for now, let's say, we could have a move up to 1227. However, okay, there are some better trades to take today.
Mm-hmm.
Of course, I think that there are some better trades. And yes, the next one which I was going to discuss about is GBP cut. I noticed, to be honest, a very interesting pattern in the GBP cut on the weekly time frame. And because it's against the Canadian, I'm looking forward for your oil comments and analysis and insights, so I can get more indications how this is going to move, because the Canadian is highly correlated with oil prices.
Definitely.
And yeah, below, if I see a solid breakout of 1.9720, I'm going to follow that on the daily time frame, and not for intraday. I mean, for some 2-3 days or a week, I'm looking for this trade. And as you see here on the hourly, we already had a breakout of 197.93. Following this at this level could give some room in order to better manage your risk. So between 197.20 and 197.90, we have something like 70 pips. So somebody, in my opinion, because we're going to test the 1.9720, the GBP, it's negative today as well. We saw the GBPUSD before, and it has a bearish structure. And looking at the oil prices, which were supported by the recent releases, I believe that GBP CAD could be a good trade in the following days. And even if we see a structure of a bearish structure here, I think that below the 1.9720 support, we're going to have chances to follow on the downside. And lastly, the last currency pair that I want to discuss and give some indication is the EURGBP. We saw that EURGBP was rising in the last month and has peaked to 0.7891, which is a 2-year high. It's a strong level here. And at the same time, what I see in the daily price and momentum, I see a bearish divergence. So this is one of my favorite structures. And when I see that, I consider that the bullish sentiment is very weak. I expect to see a reversal formation here. So I expect to see a swing or a double top trending pattern here because of the bearish divergence. It's a very early though sign, so I will expect the break of the uptrend before we consider entering into the market. And also we have the UK releases of employment of the labor sector, so it's going to be a busy day for the British pound. And in addition to that, on the weekly, this is overbought. We see bullish candles up. There is only one bearish candle in pattern, and at the same time the momentum 14 has exceeded the previous weeks here. So I consider this structure overbought. I have the bearish divergence in the daily, so I can take some lower trade sizes in the hourly, in the intraday. So because it's not certain yet, doesn't have so many chances yet because I didn't see any break of the uptrend. I may take some low trade sizes in the hourly when I will see a reversal.
If I were you, I would actually wait on this pair. If I were you, I would wait on this pair because from a true Fibonacci analysis point of view, our next target stands at 0.7963 level, to be very, very precise. And there is 78 to 82% probability, which is very high, that level is going to be achieved. If you go on weekly time frame and basically on weekly time frame, if you can go, please.
Yeah, weekly. You mean, okay, like the Fibonacci?
Yeah, on weekly time frame, if you can combine the highest high of the week of January the 10th to the lowest low of the week of November the 22nd. Basically, the bullish candles of the previous wave, the other way around.
I mean, I think that you will have to take the screen and show it because, yeah, it's.
I'll share it myself on my screen in just a bit, and we can go through it as well, because we have a perfect Fibonacci wave confirmation on this currency pair. It's one of the very rare scenarios that we have a 8 candle confirmation, and whenever that happens, the probability rise to 82%, which is extremely high. That the next target is going to be 0.7962. That being said, let me take care of, move the screen on my side so that we can discuss other.
Shall I say one last thing?
Please.
Yeah, it's the what we are giving to the participants today, actually. As a head of brokerage, I'm providing, lower spread account to participants today, so they will be able to open an account with FCM Forex and have as low as 0.8 spread on euro dollar. That's it, actually, and it's our
gift to, let's say, give. Right?
Yes, for the professional accounts, exactly.
All right, and what is the deposit that you are offering, or what's the minimum deposit? Let's put it that way.
Deposit costs $200.
Okay, $200. Guys, you heard Adamos. I highly recommend you to go ahead and check it out. You can start with $200, and I know that Fidelis or FCM Forex, they are 100% STP. So go ahead and test it out. See what's a real professional account really like. That being said, I'm going to be taking over the screen now. So I'll start first with the EURGBP, as we were discussing a little ago. The reason why I say that there is a high probability that EURGBP is likely to go on a bullish side up to 0.7963 level is because of the following wave that we have. If you combine the highest high of January the 10th to the lowest low of November the 22nd weekly candles, you get to have 8 candle formations, and 8 candle in Fibonacci, perfect Fibonacci confirmation is a 82% probability winning ratio. And whenever that happens, basically you get to have a target of 110% custom Fibonacci retracement zone, and from there you target 76.4, and from there you target 138.2%. So we have had almost 110% being achieved. We had only 10 pips differentiation there, but 76.4 was achieved to its 100% perfection. And the next one that we are having right now is a bullish candle as well. And last but not least, 200 weekly simple moving average is also right there. So I would expect the current pair to go rise up to that level. And if you are a risky trader, which sometimes is worth it, if I were you, I would put actually a pending sell limit order at that level. And basically, I would sell this currency at 0.7960 level. And my next target will be all the way down to 61.8%, and that's 0.7420 level. And it's very much likely that we'll be achieving it. So sell at 0.7960. I think that's a very highly probable entry. And the first target will be 0.76, while the second target will be 0.74 level, more or less. That being said, let's move on to other other currency pairs. First thing I'm going to discuss today is going to be USD Turkish lira. If you look at the USD Turkish lira on hourly time frame, we started buying yesterday at 2.9530 level, and our targets, as I told you yesterday, for most of you guys, that we are actually aiming to have 1,400 pips profit target on this pair. And the reason being is the fundamental, mostly. It's not really the technicals. However, technicals also support the idea majorly. So from a fundamental part, we see that the Turkish banks are getting afraid, and they are calling their retail clients to return their pending credits ASAP. That is an indication that they are having funding limitations in their banks. So basically, they are having trouble with their cash flows. So whenever that is the case, it is an indication of an overall crisis beginning. So that's the main reason. If you missed the entry yesterday at 2.9540 level, I would suggest you to wait again for the pair and enter at 2.9620 level again, and your target is going to be at 88% Fibonacci retracement zone, or you can first go for just 3.00, which is a psychological resistance level, and from there onwards we will be aiming to go for 110%, and that's at 3.10. Moving on to crude oil, we have a very important development from yesterday. Basically, the Saudi Arabian and the Russian oil ministers came together yesterday, and what they did was they agreed on so-called production limitation. One thing worth mentioning about this production limitation is that it is not to cut the production, but the agreement is made in order not to increase the production. So it's different. So that means we will not be seeing production or production decrease. We will not be seeing lack of crude supply, but we will be seeing, we can basically expect not to see increasing crude production. And if you look at overall OPEC production, just the OPEC production, we would see that compared to 2014 to 2015, we have had so far 1.5 million barrel per day increase in crude production, while the demand dropped by 0.7 million barrel per day. So we have basically the deficit of 2.2 million barrels per day, which means there is more supply than the demand. That's the main reason why the crude is falling. Yeah, and based on the reports that I have been receiving from Nigeria, which is another oil producing country, the country is right now having trouble to sell 25% of their crude contracts for March. And we are here almost end of February. There is only 2 weeks left, and it's very rare case to see a country not being able to sell their production, their contracts for the next month, just 2 weeks ahead of it. So this is going to be another challenging scenario as well. If you are from Nigeria, you might see your currency to depreciate massively, and I see some people from Nigeria on the participants list. But additionally, on top of that, if you are trading crude oil, I would suggest you look for a break below the 28.65 level, and your first target is going to be 138.2% Fibonacci retracement zone, and that is at 27.74. And the final target that we will be exiting the entry will be at 26.70 level, and we would be exiting the crude from there on. So that means, back to Adamos' comment as well, because Canadian dollar is correlated with crude oil, we could expect to see Canadian dollar to depreciate with the crude oil as well. Okay, so this is one thing to keep in mind. Meanwhile, if we see that the crude for some reason managed to break above the 30.22 level, then we would be seeing the bulls being unleashed. Our targets will be 30.98 level, which is 100% Fibonacci retracement zone, then 32.01 level, which is 88% custom Fibonacci retracement zone, and finally we will be expecting to sell crude from $34.20 level, which is 61.8% Fibonacci retracement zone. Now, our final pair to be analyzed today is going to be New Zealand dollar, US dollar. I made an analysis last week that we were looking for New Zealand dollar, US dollar to reverse from 0.6520 level. However, it appears that I might have missed something in my previous analysis, and that was one of the candles not being really matched to my Fibonacci wave. So there is a likelihood that we actually did see the bottom of New Zealand dollar, US dollar yesterday, and that was basically the lowest low of yesterday at 61.8% Fibonacci retracement zone. And at this given moment, I have to cancel my previous order at 0.6520, and I'll be moving my pending buy order at 0.6435 level, which is 88% Fibonacci retracement zone. And if we go on daily time frame, we would see that it's also the bottom of the falling or the rising trend line. We can see that there is a high probability that we will see the pair to fall overall from 38.2% from this level more or less to the level of 0.6470, 0.6450 level more or less, and from here onwards we could possibly expect the pair to rise once again towards 0.70 level. But of course, this is a very high level swing positioning that we could expect to see. This is it so far for today. Thank you very much, and it's time for your questions.